despite this growth, as also said by previous speakers, AUM accounts for only 11% of GDP. So, and as compared to US, where it's more than 100%, or world average, if I heard Mr. Parekh rightly, about 62% or something. So naturally, fund industry in India has a lot to catching up to do, and there are a lot of opportunities for the growth, as has already been presented in presentations by AMFI. So I will straight away go to the issues and challenges which I feel are relevant to the industry. First is, let me start with the concentration issue. It is a cause of concern that despite such tremendous growth, majority of market share of industry remains concentrated in a few big players. The top 4 mutual funds account for almost 50% of industry AUM, and top 7 mutual funds account for around 70% of industry AUM. Concentration in the industry is evident not only in the AUM figures, but also in the revenue and profit margins of mutual funds. It is observed that share of revenue of 7 large AMCs is more than 60% of the total industry revenue. Profit margin, that is PBT as a percentage of revenue of large mutual funds, has also stood at a very healthy rate, somewhere between 40 to 50%. It is therefore apparent that large AMCs have a fairly high market share of total AUM, revenues and profits for the industry as a whole, indicating a high concentration of the industry in few hands. Is this concentration due to lack of adequate competition in the fund space? Are such disproportionately high profits due to high TERs, especially in equity funds? You would appreciate that from overall industry perspective, an industry which is growing and which is likely to grow much more, as has been rightly said by the previous speakers, some thinking perhaps is required to bring in elements that facilitate a healthy competition in the industry, which we feel is lacking as of now. Second, the issue of risk management and valuation. As the industry gears up to move to the next level of growth in terms of size, aspects of risk management and valuation become even more important. And let me dwell little bit more on this issue. Valuation is extremely important for mutual funds. This is one area that is of fundamental importance, as it has direct ramifications on the integrity of the industry as a whole. This is especially true for debt mutual funds. It is observed that exposure of mutual funds is more than 91% in AA- and above rated long-term debt instruments, and almost 100% in A1 plus rated short-term debt instruments. Further, retail participation in debt-oriented funds is less than 7% of AUM, and that in liquid funds is even lesser at around 2% of AUM. In other words, around 11,50,000 crore of debt AUM out of total of 12,30,000 crore is held by non-retail investors. Debt mutual funds are also being used by non-retail investors mostly to park their short-term funds. Debt funds therefore have to be...
Ajay